working for Bitcoin, working to increase Bitcoin adoption.
Ladies and gentlemen,
participating in a Bitcoin treasury company not only is the best performing stocks since the launch of their respective strategies.
We are live.
But on top of that, you contribute to Bitcoin adoption in the world, and that's where we are.
Ahead of Michael Saylor's historic
Can I just say one more thing on the institutional side too?
Bitcoin speech.
So when you think about certain brands that have a negative connotation with the old financial
Look,
system, these institutions
Logan.
are really big. There's a lot of people that make them
Bitcoin,
up.
how do you,
And as these
Bitcoin to
have
the
seen
moon.
the
What are you
opportunity
talking about?
to make money in Bitcoin, the teams that
This is Michael Saylor.
building
This is the
to
Messiah,
run those
Logan. This is
operations,
the crypto
those people get
Messiah.
infected
All right? He's
by the
coming
Bitcoin
on
virus. And
in
now
5
there's
minutes.
Bitcoiners inside of these
You know, am I a big crypto
And so I feel
person?
like, in some
No.
ways, Bitcoin is this, like, global
Could this
conspiracy
market get some decent flow
freedom
on
and
what Michael
capitalism.
Saylor will say? It's
And
been
as we
front.
put
It was
more
like
and more
up there,
Bitcoiners
front page for quite a while.
inside of BlackRock.
Alex, there are
BlackRock doesn't change
actually
Bitcoin,
so
Bitcoin
many
changes
bonds on this
BlackRock.
market. It's kind of insane.
And I
Like,
think the more institutions that we can build
let me
as part
turn
of
this
our
down.
coalition-
But it's funny because I haven't like paid much attention to super small markets in a while.
State of what we want, which is hyper-Bitcoin.
Logan, look, this is important. But there are a lot of bonds. Like Alex, there's like not too much liquidity for this. I'm the 91 bidder, but like it's crazy. These like really small markets, like this, like million. I was getting filled at like 92 for million. I know. I thought there would be. Yeah. Look, we're gonna make the liquidity roar. How long is Trump gonna actually talk tonight, though, Logan? You know, but it's crazy on these small markets, though. How like I was getting filled at like 92 on million. Like, I mean, I looked at historical, this Saylor guy's speeches, and it's like he's never like, has this guy ever not hit million? I mean, you know, like be careful up there. There's not much liquidity anymore, but it's just funny, like. If this was like a high liquidity like Trump market, people would be bonding stuff like at crazy prices. And then like Satoshi was at like in the 60s earlier. I mean, it's not an absolute bond, but like this is like a Bitcoin conference, and just polling like his last few Bitcoin keynote speeches here, like. Also, I'm getting some like crazy feels. Where this is front page is Coinbase, their app. So I think actually could get some decent taker flow from there. Like I just got filled on like Bull, no. Who is buying Bull? Yes. It's just like crazy. Like I've never seen this guy say Bull. Maybe I just don't know what I'm doing, but some of these strikes are like bizarre. Let me look at Satoshi.
Corporations is doing great work for us to kind of help organize and mobilize the community and to make their voice heard. So, you know, the public comment period is
I mean,
until May 7th.
he hits Satoshi pretty consistently. He didn't hit it at some Blockworks digital asset summit, but again, that's like less Bitcoin focused. Doesn't hit it multiple times, but like would be pretty surprising if he weaves it here. I guess 70 is probably fair, like where it's at, like 70, 75. But like million was like so bizarre, being able to like get filled at like 90. I gotta look at like these smaller mentions like way more, honestly. I mean, granted it's like not that much liquidity, so it's kind of like $100, but
Well, you know, to put it more diplomatically, you know, I think like one we're not.
am I familiar with this
So
lingo?
it's not-
Do
we're
I
not
own
being
Bitcoin?
limited to be, you know,
Yeah, exactly, Logan. I gotta become but a humble slop farmer.
You know, is delayed or doesn't happen.
Yeah, he almost always says bullish. I mean, yeah, he said bull before, but I mean, I'm getting filled at like 68 on no. Feels pretty good. But he said bull at a Bitcoin keynote speech in February. Okay. I don't know. I pulled like 7 or 8 speeches and like was not really. I mean, maybe he could do it. Digital credit is a lock. Yeah, but isn't digital credit more related to his like micro strategy company? Like, I guess I don't know how specific this is going to be to his strategy company versus like. Obviously, it's probably good, but like to me, million is way better than like. I don't see how this guy could not say million. This guy hits million like 10x. So $20.
I won't speak for medical, but there is definitely
Look, it's not that bad, Logan. It's not that bad.
TradFi for a reason. There's a club.
I do want to become more of a slop farmer, honestly. No, I agree with you guys. Digital credit. You guys probably know more than me. Someone was asking me, do I own Bitcoin? I do not hold Bitcoin. I don't hold any crypto except like USDC. On job interview on Monday, dude. How you know Logan is down bad this month is he's going to a job interview. Holy dude. A large coalition of institutional investors, of retail investors, of but yeah, I have USDC. And that's about it. I'm not like bearish on crypto necessarily. I just, you know,
are the political capital that we build, the financial capital that we build. And
I could get a much higher return, obviously, from like PMs than buying crypto. But I mean, it has pulled back a bit. I mean, I don't know. I don't know how I would trade crypto like spot. I don't really know what like top crypto traders actually do. Maybe they're just Mega Auralos not holding Bitcoin? Damn. Dude, I hold index funds. That's where the aura comes, dude. Retirement accounts, index funds, the stock market equities, bro. Alright, I should pump and dump meme coins. I think it still is a thing, or I think it's at least like holding on to be a thing. I still see like people with meme coin terminals. He's about to speak. He's going to speak in like, I think, a minute. Index funds are aura. Index funds are the way. VTI, ticker symbol. Less than 0.1% expense ratio. I don't know who these people are, but it's really interesting the subset of people within crypto as an outside observer that would be like Bitcoin, like, you know, maximalists. Look, Rig, there's not that much liquidity here, but like all I'm really on for the most part is just like million. I mean, there wasn't that much that I liked at some of these other prices. Then I'll probably live click some stuff, but and also I was like market making a little bit of like bull no at like 68. I'm like, I'll take it based off these. Honestly, stock market here, it's kind of interesting too, getting down to like 50-50. But like, I mean, this guy hits million, like, you know, there's absolutely no way this guy's not going to say million, especially in like a keynote.
Bitcoin mining. Who cares? Everybody wants Bitcoin, and everybody will find.
This is slop farming, Rigatoni. It's what you got to do.
So I'm not concerned that
yeah, Shane, that was aura loss. I told you that would be aura loss too. It was especially aura loss when I was like, you know, that shit ain't hidden.
This is a fight that continues.
But look, no, very look, Logan, this is prime. Slop. Look, man, we're gonna learn about crypto assets. Look, we can't just be Trump every day. Vegas, why is a sneaky one? Because it's in Vegas. Did he say that? Is Bitcoin always this conference always in Vegas? Where was Bitcoin 2025?
So I think that every company on earth that adopts Bitcoin should be supported.
And he hit it in 2025?
Really, the end game is for Bitcoin to be adopted at scale, and we will work every day for that.
We're out of time, but I
wow, big guy Logan needs 20K in volume.
At UTXO, we funded and underwrote roughly 20 Bitcoin treasury companies around the world. And when you're on the
oh, but in other places he'll hit, but he's in Vegas. Got it.
To deploy capital, and it looks easy to run a Bitcoin treasury company. Now that I'm running a Bitcoin treasury,
why don't I ever show live trades?
In the capital markets.
I mean, I used to. Like sometimes, I don't know. The issue is like, if I'm gonna be like limit buying something, you know what I mean? Like,
and I just want to give a shout out to Alexander and for Dylan and for
you got screwed over for the Trump speech at the White House court. They won't pay anyone out. You hear about that, right? What do you mean they won't pay anyone out? They just paused it. They're either gonna go last traded price for everything, or they're gonna go no on everything, yes DNQ. But no one knows. I think they're like arbitrating how they're gonna resolve it.
That's what gives you conviction to hold through the hard times. And so y'all's leadership
What was someone else saying on?
is doing that for
But yeah, I mean, like,
traders. You know, I
with
also
showing
think
live, there's just like not enough liquidity to show live trades. Like,
going back up.
I don't like want people to necessarily try to like tail what I'm doing live, or just tell me in general. Like if I show live stuff, what'll happen is like if I click something, someone's gonna like click it for like 10 cents worse of a price, you know? Yeah, that's what's happening, Shane, with it. They're just deciding how to resolve it.
Welcome back to the Bitcoin Magazine News Desk, powered by Mara. Before we touch on the words from that panel, we're going to find
wow,
our
they have a
roving
Gemini
reporter, Isabella Santos, and
predictions thing in the back.
she's going to take
Does
us for a
anyone
little
use
spin
that?
around the Metaplanet booth.
What is this?
Hora pura! Hora gato, no hay más. Welcome to Metaplanet. Did you know that 1 out of every 500
You guys ever gone to conferences like this?
companies
Should I?
own a Metaplanet
Is it
share
fun
stock? And did you know
to
that
go to like
Metaplanet has a
conferences? I mean, Kalshi had that conference I went to, so that was fun.
crazy? Well,
But like
20
these ones are like huge.
at the Bitcoin conference, and you can go buy their merch, buy a little
No,
coffee,
don't go to these.
coffee, buy the Bitcoin Magazine Japan edition, and you might find
Well, there's
your
gonna be that
favorite
December
coffee
Vegas
for
conference that
all
I'll go
in
to.
stock.
That'll be
And
fun.
we have all the girls from Metaplanet. They got the magazine. They got hats. They got coffee. Check out Metaplanet.
Man, how do we get more crypto people from the Crypto 15 Minutes to come in
All
Dimensions?
right, welcome back to the Bitcoin Magazine News Desk, powered by Mara.
Are you a Bitcoiner, Solstice?
I don't know, I just feel like I need to come up with some kind of product to get her to sell, because she's just.
How
she's
long
gonna
have you
push
been
it.
a Bitcoiner?
She is gonna push it.
Not her first rodeo either.
Not at all.
I think they were like gonna announce it today. There's this one that this guy Chickens
I'm buying two.
putting on.
All right, we're back. I'm Jeff.
BTC conference in El Salvador.
By Frank Corvo,
That would
content
be
producer
sick.
strategist at Fetty, and
You're a big crypto guy, Rig? Are you a meme coin guy?
We just saw Dylan Leclerc from your
Yeah,
company out there on the
Bitcoin
panel
sucks, I
talking
figured.
about, Bitcoin treasury companies. What can you tell us about
You're in
the
mentions from the 15 minutes? Good.
Bitcoin treasury companies?
That's the perfect
Really
flow.
interesting moment in Bitcoin, where this
At least, you know, in mentions you'll have a fighting chance.
internationally and providing
Memes in Solana? Yeah, there's so many like
you can't get exposure to Bitcoin.
I don't know, I feel like meme coins are so dead.
What's interesting
I've never traded meme coins. It's just like my brother used to heavily, so I talked to him about it.
stock. This is their first exposure.
But
So we're able to bring them in and
like
really
meme coins used to run.
educate them about the sound money revolution.
And are you seeing that exposure to Bitcoin?
I have held some meme coins in my life for a temporary period of time, but I sold out of all of them. But like my favorites were
Of our
Harry Potter, Obama, Sonic, Tenenu coin.
we estimate have already had Bitcoin. And
Like that was just such. I wish that just went parabolic.
is getting new exposure. And when we have in-person events, there's a lot of questions.
Yeah, there is a
Fundamentals of Bitcoin, we're able to provide education on site.
probably because you said it, Solstice. There's not that much liquidity in these markets. If you say something,
To the Japanese market.
it's gonna
We
move.
found that it's just
But
a really great
look, I'm
opportunity
just
for
here
us
to collect my free $100 on Million, and then
Is it all just
you know,
publicly
chill,
traded
I
companies
guess.
holding Bitcoin on their treasury? You deal with much smaller companies and smaller organizations. Can you tell us a little about that?
Speak with people all over the world, from Africa to Latin America, Southeast Asia, small companies.
All right, seems like this guy's gonna be late. He was supposed to start 8 minutes ago. I don't know if these conferences are normally on time or late.
Publicized as much. I know people like Alex Leichman at River is constantly onboarding small businesses here in America as well. So
I wonder how fast this market's gonna be to bond
especially to
too.
see this happening through the bear
Like
market,
if there's gonna
we're
be a
at
ton
phase
of
where
automated
it's like, okay, Bitcoin's
people
priced
bonding every
right now.
strike.
There's no like Bitcoin is dead. There's a little bit of that because the haters are always going to
No on Quantum?
There is this idea of okay, now might be the good time to start thinking about
I mean,
an asset. So instead of buying the top as we were talking
he
about
said it
earlier,
before.
maybe accumulating
I did see it come up.
slowly and in sort of a rational, sort of calm fashion here, learning about Bitcoin while the bear.
Someone's courtsiding for sure.
But yes, companies
Is there
all
even
over
that like
the
that
world.
much? Like even if you were actually, there is decent liquidity if you were there.
When David Bailey speaks, he's talking about the hope that comes with knowing that we come out.
I mean, there's like 500 shares to click on like every strike.
Wherever you stand on the 4-year cycle, there is still a cyclical nature to what we're doing, and so
Trump's kind of interesting. Trump's actually pretty high. Does he normally talk about Trump?
It makes sense that it's going to
Well, talked about it a lot last time.
and therefore educate them. Wouldn't you think?
That's right, and I think what we see during the downturns and really the bear markets is who really has the time in hands, who's in it. For the
You're
long
welcome,
haul,
Mr.
who
Nick.
understands the fundamentals.
I know you guys love. See, I had to do this event for the Bitcoiners out there, you know,
Demand is the thing that's going
for
to
the
come.
crypto bros out there. I had to do a non-Trump event.
People just don't have that much
The nice, you know, it's Bitcoin 2026. Everyone's talking about it. You tried to get someone to courtside that for you? They were busy? Yeah.
Can't be on zero, right? And it's like, as soon as they're involved in treasury company,
but look, today we're going to learn about the wonders of Bitcoin. I wonder if Michael Saylor is going to be in any different of a mood this year, given like Bitcoin price action. Like what's happening to MSTR? Well, actually, it's pretty close to like the same. Whoa, actually, yeah, 1 year ago today, MSTR was literally like almost 3x what it is today.
To know that you have to keep a certain amount of your wealth liquid, which you can do with Bitcoin. At the same time, it's an asset that's gaining value.
How bizarre! What a company!
Exactly, and very well said. Thank you.
You should have a company where you accumulate Bitcoin, and then you issue debt, and you accumulate more Bitcoin.
Stick with us. We'll be right back.
Now it's a $58 billion company. So you guys, you just got to come up with ideas. Is this it? Is this the moment everybody's been waiting for all week? The Michael Saylor?
Show. We have a small announcement to make, so cue the video.
All right. Is this announcement going to tell us something about Michael Saylor?
Every year, this community comes together.
Oh, it's a Bitcoin 2026 announcement. Okay.
Debate. To build what comes next. And every year, the stage gets bigger.
RFK was there? What is JD Vance?
Sound money. Centers.
I didn't know JD Vance.
So, where do you go to celebrate the next chapter in Bitcoin history? You come home. Nashville, July 2027.
So next year it's in Nashville?
So Vegas, we love you. We'll miss you. We'll be back at some point in time, but we're excited to take the Bitcoin conference back to our hometown of Nashville, Tennessee. Are y'all excited for that? Let's go.
Not a very loud crowd.
Okay, so without further ado, I want to introduce somebody on stage to speak, someone who is an inspirational leader, inspired me, is a pioneer of our industry, is someone that I think is the definition of focus and conviction and courage.
Who here has not been inspired by Michael Saylor? If you say that, you're lying.
One and only chairman of MicroStrategy, now Strategy,
the chairman
Michael Saylor.
Of Strategy.
Michael, please come out.
Here we go.
Thank you.
Wow, look at that guy. He's ready to go.
I'm delighted to be with you today. And the topic of my presentation is the latest developments in digital credit, digital yield,
Wait, dude,
digital money,
so slow to bond,
and the digital transformation of the capital markets. I think the last 12 months have been extraordinary, and not the least of which
it was extremely
the
slow
reason that the digital credit industry has been born in the last 12 months. And I want to talk first about digital credit, why it's even possible. Digital credit is a killer application of digital capital. Bitcoin represents ideal capital. It represents engineered capital. It represents digital capital. And it was created, as you know, by putting together a set of technologies: proof of work, public key cryptography, peer-to-peer networking, distributed timestamping. And by putting together a set of components that had been around, Satoshi was able to create an ideal capital asset, an asset that's
I could get first
non-sovereign store of value, bearer instrument without counterparty risk.
I thought
digital credit, in a similar way, it's engineered credit. It's ideal credit. It's digital credit. How do we build it? Well, we start with some off-the-shelf techniques. Listed public companies, they've been around for 100 years.
Maybe
a capital asset on the balance sheet. We chose Bitcoin.
No, we did not hit Vegas.
A perpetual preferred equity Preferred equities have been around for hundreds of years. We used a monthly variable dividend. It's been available and possible, but no one ever thought to put it into a credit instrument like STRC. We use a standard tax treatment called return of capital. It's been around for more than 100 years. And then we combined all those things with a shelf registration, an ATM program. Those had been around a long time, just no one had ever thought to put it together with a credit instrument. And by combining all of these things, we were able to create digital credit.
All right, yeah, this guy has hit digital credit like...
What is credit? What is capital? Well, the world's built on capital. The world runs on credit. Capital is for someone that wants to make a long-term investment without cash flows, and they're going to bear all the currency risk, all the duration risk, all the volatility. They're going to bear all the uncertainty for a long period of time because they have a low time preference. And there are a set of people and a set of investors that want that capital investment. But credit is for people that have a much shorter time preference. They don't want the risk. They don't want the wait. They want steady cash flows. They don't want the volatility. They don't want the anxiety. They have immediate bills to pay, and they want that cash flow now. And so our company's strategy converts capital into credit. We take the BTC commodity and we convert it into a currency like the US dollar or the euro. We stretch its USD. We take the risk that's one for one, and then we over-collateralize to strip it away. If you collateralize something 5 to 1, that means that the capital asset can fall 80% and you're still fully collateralized. So the capital investor has lost 80% of their collateral. The credit investor is still protected. So you're stripping risk. When you do that, you damp volatility. The volatility of Bitcoin's been 40. We strip that volatility away when we strip the risk away by targeting a standard value. And from that, you extract a yield, a cash flow. And you do that while compressing duration. Instead of waiting a decade in order to get a capital gain, you get a yield within a month. And so the world's built on capital, the world runs on credit. We designed a lot of credit instruments, but after many tries, we finally discovered STRC. And STRC is built to provide the benefits of equity investors, like double-digit returns and tax efficiency, with the benefits that credit investors get, like low volatility and capital preservation. So if you can combine all of those together, you have the best of the credit world and the best of the equity world in a single instrument. Digital credit appeals to people that might like private credit. Private credit is the reach for yield. People that don't like money markets, they don't like investment grade bonds or junk bonds, they buy private credit. There's $3.5 or more trillion in private credit. But private credit's illiquid, it's opaque, it's heterogeneous, it's a portfolio of 1,000 private loans. It's discrete, it's restricted to qualified investors. There's a high fee associated with it. And we just saw in the past month that private credit markets have been melting down. They got hit with a rash of redemptions. They couldn't meet their redemptions. And yet it's $3.5 trillion of money that wants to invest in these instruments. Digital credit, it's liquid, it's transparent, it's homogeneous, it's scalable, it's accessible to everybody, and there's no fee. And so if you look at this, you could see that digital credit, even if it just transformed 10% of the private credit market, would be $350 billion in today's dollars.
All right, this guy's hit trillion,
digital
billion,
credit's meant to
billion,
appeal to lots of
million.
different investors.
Come on.
It's meant for retail investors. It's meant for digital native or crypto investors. It appeals
it's
to
made for
hedge funds
everybody.
and hybrid investors.
Oh, is that?
It appeals to institutional credit
Oh my God, we could have
investors.
just clicked institutional.
And
like,
it's also an
immediately
appeal
when
to
he
corporate
started-
treasurers and
when
CFOs
he
that
showed the
want
line
to
for
hold
all this
some
stuff.
high performance monetary
What's
asset on their
institutional?
balance sheet.
I gotta be more awake clicking some of these.
A lot of people were surprised when we used a preferred stock to do this, but it
Debt
turns out
markets.
that digital credit is just the reemergence of preferred capital after 100 years.
I am
If
not
you go
starting to sweat
back
at all.
to the
I'm only
19th
leaning.
century and think about the last major capital development effort, which was railroads, most railroads and a lot of the early industries during the Industrial Revolution, they were financed by preferred stocks. It used to be 20 to 40% of the capital structure of corporations. In the 20th century, preferred stocks fell out of
If
favor.
this guy
It's
really
almost
were
like
not
they
to
were
say
forgotten.
million,
And
would have
now in
to
the
be
21st
intentional.
century, we've reintroduced the idea of preferred credit or preferred stocks back into the capital markets. Now, how do you create it? People always wonder, how do you create an 11% yielding credit instrument? Well, you
Yeah, this is
start with the
literally all
performance
pushing
of asset
TRC.
classes. And if you look at the performance of Bitcoin over the last 5 years, it's up 38% a year,
You
which
bought
is much
no?
better than gold or the S&P. Real estate's up 6% a
Alright.
year. Money
You do
markets
you.
are up 3% a year. You can't create a credit instrument that pays a dividend higher than the capital return of the capital that the credit's being invested in. So as you can see, the theoretical highest yield you could ever pay on gold-backed credit would be 16%. The theoretical highest yield you can pay on real estate credit is 6%.
Okay, this bar
On the other
chart,
hand, with Bitcoin, the theoretical yield is 38%.
how far back is he going?
So if you think about the theory of asset-backed credit or the theory of digital credit, what you do is you take the capital gain you expect in the capital asset, and then you pay a portion of it to the credit investor.
Yeah, 38%.
If you
like, is
expect
that back to,
30%
like,
in Bitcoin,
2010?
you could pay 11% to the credit investor. The excess yield, in this case, the 19% yield spread between 30 and 11, that goes to the equity. And so the common equity investor gets the actual carry or the
Last
yield
10
boost.
years have compounded.
The credit
I guess
investor
going back
gets
to
that
20
first 11% strip
I
of
just
return
don't know if that's a
with
fair
risk
representation
management
of
principal
future
protection.
returns.
You could do what we've done in theory with gold, with real estate, or with the S&P index, but you wouldn't be able to pay as high a dividend because those asset classes don't perform as well. So here's another way to look at it. Bitcoin is something for people that want to hold for 10 years.
Okay,
It's a
I gotta
roller coaster.
readjust My stream.
It's
cutting
got
out the
30
charts.
ARR. It's got
You guys
30
gotta
or
see
40
these ARR
volatility.
charts. This is
You're going to
important.
have years where you're up, years when you're down. You're going to have no cash flow for a decade. Digital credit simply strips the first 11%.
All right, I'll cut from
You
the
return it
left.
to the credit investor, and you get a very comfortable ride. Now,
all
if
about
you
a
look at that
comfortable
chart,
ride.
you see we're just doing signal processing on a financial signal. Where does the excess volatility go? Where does the excess return go? It goes to the equity.
I still
And so we
am
created
not sure
digital
what's
credit
going on.
off of digital capital, and then that creates digital equity.
Yeah, it's a
As it
comfy ride.
turns out, all three of these assets are created with digital intelligence. We couldn't create digital credit without digital intelligence.
this
So
an
if
AI
you're
angle?
looking for a killer application of AI,
There it is.
it's
AI.
taking digital intelligence and working
Man.
on digital assets
too
or
slow,
digital
man. I gotta
capital
just- I gotta
to
click
create
faster.
digital equity and
I'm gonna
digital
fast
credit.
forward it.
And you can see it at work here. In fact, we've done it with our own securities. So now, if you think about how this sits for an investor, if your time horizon is less than 4 years, if you need the money in a month or a quarter or a year, you probably want to hold the credit because you don't want any volatility in the principal. If you don't need the money for a decade and you don't want counterparty risk, if you want complete self-sovereignty, you should buy the Bitcoin,
How
the
is
commodity.
How was ETH so high?
And if you, on the
Some
other
at,
hand,
like,
have a
in the
long time
40s.
horizon, but you want to bet on the future of digital capital and digital credit in an amplified way, you buy the equity, the digital equity instrument. Now,
Who is quoting
lots
this?
of people have different views, and you have to see Bitcoin as one pole, one polarity,
look,
and
that's all you
credit
gotta
as
do.
the
You
other.
just gotta, we're learning.
People that want to be
all right? We're
completely
learning.
without counterparty risk and self-sovereign, they want the commodity. But on the other hand, in your life, you buy things all the time from corporations where you rely on the company to perform. When you get in an airplane, you trust the pilot to land the plane. When you buy an iPhone, you trust Apple not to turn off your iPhone. When you go to a dentist, you trust the dentist to not stop halfway through the operation. The world is full of examples. When you watch a Netflix series, you trust Netflix to let you finish the show.
You're trusting
When you buy
Netflix,
electricity,
guys.
you trust the power company to keep pumping the electricity. In fact, I would say there's a lot of people that want unlimited free electricity. They do not want to install a nuclear reactor in their
Holy.
backyard. And so what's happened here is we have created a crypto reactor, and we're
Someone's quoting
using it
ETH
to
at some
create
crazy prices
credit
at like 50,
in order
50.
to serve a group of people that don't want to do this work themselves. They don't want to wait a decade before they actually monetize their investment. They want to consistently monetize the investment every month for 120
oh, man, there's
months
still
in
no
a row.
millions here. It's still
Who would
just
do
on-
that? A retiree, a 3-year-old, a
It's a
12-year-old,
potential stock market
a conservative institution, a company that has lots of consistent bills, and if they don't make their payroll in 2 months, they get shut down. People that if they miss their bills, they go to jail, right? There are plenty of institutions and individuals and investors that can't stand, they can't take a long duration capital investment. For them, they need the credit. One serendipitous result we found while we were engaged in this was that if you finance the dividends from a credit instrument by monetizing an unrealized capital gain, you've created a return of capital dividend, and that's tax deferred. To the people backstage, the timer in front of me is not working, so I may very well go on forever if you don't turn the timer back on.
Oh, wow. Good for yes holders.
Maybe they're being polite. That return of capital dividend's been around for more than 100 years. But it turns out that we were the company that figured out how to scale it by combining the credit instrument with digital capital. Now, how is it doing?
Oh,
This
here
is
it is.
Stretch
Here's million,
recently.
by the way. This is million, 100%.
Stretch has grown from nothing to $8.5 billion in about 9 months. It's currently got $400 million almost of daily
million.
liquidity.
All right, finally.
Its volatility has fallen to 2.9%. The Sharp
is too
ratio
easy,
is the
man.
high 2s. It's 4x over collateralized.
All right. All I'm doing now.
Here's another
I still
chart.
have no
This is hyper
these other
growth.
things, but
How do you know that a product's working? Well, it's
Why would
growing
this guy say ETH? Does this guy actually say
350%
Ethereum?
a year. That's how fast it's
Like at a
growing.
Bitcoin conference?
Like it's
Everything I looked at
100%
doesn't
month
really talk
over
about
month
Ethereum.
growth. So I don't know
shit,
how
it's
long this
still
will be
in
in
the 50s.
hyper growth, but right now this is the fastest growing credit instrument in the world,
Plus, it was
maybe
priced
in
like
the decade or the
70
century.
cents for no before.
Why is it growing
Unless
so
there's like
fast?
something. Like, I don't know why this would tank.
Well, it's growing fast because it's ideal credit.
Maybe someone saw
because
the
it was
slides or something,
engineered
and
to
I'm just
provide everything a
feeding
credit
someone.
investor would want if you look at it from the point of view of the investor, not from the point of view of the issuer. Right? Most credit investor or most credit issuers want to create an instrument that's good for them, that's bad for the investor. We started with a blank sheet of paper using digital capital, then we used digital intelligence, and then we designed a credit instrument that's good for the investor, that's the ideal credit instrument. Now, how can we tell? the instrument grew to be the largest preferred stock in the world within 8 months. It's now $8.5 billion. I'm showing you the 10 largest preferred stocks.
To be honest,
if you read the chart, what you'll see is that
buys
Stretch is a simple thing to remember.
and then
STRC.
It issues debt and it buys
the
more
other
Bitcoin.
stocks
It's
are
genius.
C/PN or
He's hitting stocks, by the
POW.PR.E.
way, but not stock market.
If you went and searched for these, you wouldn't find half of them. Like, you can't even Google them hardly. How do you buy them and sell them if you can't find them? They're actually institutional products. They were never meant to be bought. Some of them, the ones that say OTC, it's illegal for you to buy them, right? They weren't built for the public investor. They were built for an institutional world that traded credit in the 20th century. And so what's the result? Nobody trades them. STRC isn't just the biggest preferred, it's actually the most liquid preferred in the world.
Okay, this started at like 50. So
in 8 months.
20 minutes in. I say we have 15 minutes
Let me say that again. In the world, it's the most liquid one.
Holy shit.
It's not even 12 months old.
Dude, this market maker is just like
Look who it's competing against. Wells Fargo, Bank of America, Fannie Mae, Citi, JP Morgan. It's 25x more than the next best one, and it's not a year old, right? It's like Superman as a toddler beating the crap out of everybody. And it's because it's Bitcoin powered, right? Now, if you delve a little bit deeper, you'll see that it trades 4.5% of its AUM every day. So it's not just that it's more liquid and it's bigger. It's actually faster, higher powered money. And it's higher powered by an order of magnitude. And so you can see the superior engineering design. Now, what else is highly liquid? Bitcoin. The reason digital credit is highly liquid is because digital capital is highly liquid and the digital equity is highly liquid. And it's not an accident. They're all correlated to each other. If you want to build the one, you have to build, if you want a high energy credit, you have to build it on a high energy capital asset. What else do you want from credit? You want it to be stable. And so you can see in the middle of the crypto or the bear market here, in the crypto winter, Bitcoin peaked in October 6th.
Bull.
It was 125,000 a coin.
On Bull.
It's 38% down. STRC is 0%. It's exactly held par.
Is he going to hit bull
And
market?
so what you can see is that the credit instrument is something you can manage to hold principal value. And you need an issuer to do that. That's where the company comes in. The capital instrument has no issuer,
all right, let's get off
no
this
counterparty, no one's managing it. If you're a long-term investor, I would tell you every day, buy Bitcoin, don't buy the credit. But the truth of the matter is, most people aren't long-term investors able to take that volatility. They simply want to put their money in a bank account, collect 10 or 11% and not worry about it, let somebody else worry about it. And STRC is built for them.
All right.
You can see it seasoning. This is the last 8 months or so. And it started off with a rocky start, and it gradually fell into the zone. In January, it traded in its target trading range 90% of the time. February was a very difficult month. It traded 80% of the time. And then in March and in April, it locked into place. It's been 100% in the trading zone in March and April.
100%.
So you can see it's hitting its target range now. And of course, liquidity is everything. There's no point in me telling you this is a good product if you can only buy or sell 100,000 a day. You're not going to get someone to invest $1 billion in something that trades that it would take them 10 years to get out of. And so you can see the liquidity here has grown by a factor of 8 in 5 months. Again, hyper growth, right? Off the charts. There's never been a credit instrument that grew in liquidity like this. This is going viral.
Viral?
This is a chart of preferreds where you look at the return versus the daily liquidity. And you can see STRC is in a class all by itself. It's the supernova of credit.
Supernova.
And then everything else is on the sidewall here. It's all illiquid mediocre.
Dude, the way this guy talks is pretty...
The result
I like
is
it.
the velocity of this thing is exploding. This is the demand for STRC. It was about a $500 million business per month in January. 500 million, call it 6 billion a year. In February, we got punched in the face.
Yeah, don't buy this.
It was a
Don't buy
really
this, guys.
difficult month.
To clarify.
Massive Bitcoin drawdown, and it fell to 80 million in demand. In March, it jumped to $1.5 billion. It became an $18 billion a year product. Imagine going 0 to $18 billion a year in the first year. And then in April, it went to $3.5 billion. Multiply $3.5 billion by 12.
Oh man, we're doing some annualizing.
All of a sudden, 0 to $38 billion a year in a run rate. It's not a year old. So clearly, we're in hyper growth right now. May will be interesting. June will be interesting. July. But you might go Google and ask how many products in the world went from 0 to $20 billion a year in the first year. There aren't many. It's very difficult to do. Now, if you come back to this other innovation of shelf registrations, what you can see is before we started selling digital credit, the largest shelf registration on a credit instrument in the world ever in the history of the market was $500 million. And then Strategy created a $2 billion registration for Strike, a $2 billion one for Strife, a $4 billion one for Stride, and then a $21 billion shelf registration for STRC. And so you can see here that innovation, that idea of a shelf registration on a credit instrument, it was not materially used by anybody in the world in the capital market. And the truth is, the US is the leader in shelf registrations. So when I say in the world, I mean they're not doing it in Japan, they're not doing it in Europe. The US is the leader, and in the US, we've just did something which is 40x bigger than the next biggest thing that's ever been tried by anybody. And again, we're not even 1 year old. Why? Why is there so much demand? Well, private credit yields 8.5%. You could characterize the entire credit market as return-free risk. You're getting 80 basis points of yield over the risk-free rate if you buy investment bonds or corporate bonds. You're getting 200 basis points for junk bonds. You're getting 300 or 400 basis points for private credit that's illiquid. It's all taxable. And we come up with something which pays 11.5% that's tax deferred, that's liquid, that's transparent. If you're a taxpayer in Miami Beach, that's the equivalent to a bank account that pays you 18%. Now what you see is we've created the short end of the yield curve, like the 1 month Bitcoin bond.
I gotta research
the risk-free rate.
This is all kind of hard to understand.
In the crypto
I don't
ecosystem.
know.
So what is the free market rate of capital, or the free market cost of capital? It's 11.5% right now. And you can see what the risk-free rate is in every other currency. 3, 2, 1,
11.5% is risk-free rate? Is that what's being said here?
And now if you're an investor, you can start to imagine a world where I borrow euros at 2% and I buy STRC at 11% and I keep the difference. Or borrow yen at 70 basis points and invest at 11% and keep the difference. Right? There's a massive arbitrage here. What if you live in New York City?
That's all I will say.
Stretch is like a bank that pays you 24% interest in New York City. Right? What if you live in San Francisco? 23.1% tax equivalent yield. Right? Your money market pays you 3.6%. The bank deposits pay you almost nothing. Why wouldn't you buy it? Volatility. It's too volatile. You can see we've actually taken the volatility from 13 down to 2.3 through the end of April. Our goal is to get it into the ones. We've had it into the one range a few weeks ago. The only instruments in the entire credit industry that have a 1 volatility are money markets. Now, it's worthwhile to talk about some financial theory here. The Sharpe ratio is defined as the return of the instrument minus the risk-free rate divided by the volatility. So it tells you how much you're getting paid for the volatility that you're incurring or the risk that you're taking. What is the risk-adjusted return? When the Sharpe ratio is above 1, you're getting paid more in return than the volatility you're incurring. And what you can see here is the Sharpe ratio of stretch is 2.7.
Don't know why that was staying at 50-50.
The best Sharpe ratio of a credit instrument is 0.5, right? It's 5x better than the next best credit instrument. It's 10x better than most credit instruments. Your money markets have a negative Sharpe ratio. The fee
really
charged to you by the issuer or the sponsor of the money market is higher, is so high, 20 or 30 basis points, that this is in essence, there is no return. It's return-free risk, negative Sharpe ratio. Compare digital credit to equity. The best equity in the world is NVIDIA. NVIDIA's got a positive Sharpe ratio, 1.89 right now. Nobody else in the Mag 7 does. None of them return the risk that you're taking. Amazon, the volatility is 5x the return. Stretch is outperforming them all. And it's a credit instrument. Imagine doing that with credit. And now let's look at assets. The S&P index doesn't return its volatility. It's got a Sharpe ratio of less than 1. Bitcoin, it's got a return lower than its volatility right now. NASDAQ, same thing. Gold, 0.4. Real estate's awful, right? It's got high volatility, low return, 0.17%. Really weak, 17 basis points.
This is all
so you see, Stretch has got a higher Sharpe ratio than any of these instruments.
I don't know, these ratios
in fact, it's kind of like monetary fuel. And that means it competes with $300 trillion of credit, $100 trillion of equity. It competes with real estate. Digital credit is going to cannibalize. It's going to replace real estate capital, equity capital markets, credit capital markets, currency capital markets. And you can see here on the screen, most of them are just sitting with very lackluster yields, and all sorts of risks and opacity, some of them illiquid. None of them compare favorably to digital credit. You can see it on the chart here, right? You walk down the street and ask 100 people, do you want a 30-year bond? Do you want something you got to hold for a decade and see if you get wealthy on it? Or do you want a bank account that pays you 10%? And the answer is everybody wants a bank account that pays them 10%. Some people that are specialists might think they can do better than that with some of their money. But every corporation, every individual, every institution has a lot of money they want to put in a bank, preserve the principal, and they want to get paid.
It is
3
nice
times
on these
the money
smaller
market
mentions,
rate,
like
or 4 times the money market rate.
You can just tell there's some market maker that just is quoting stuff so bad.
One of the
live.
serendipitous
like
results of digital credit
He's quoting
is
these at like 50 cents. He might
you
say
can buy
ETF,
digital
but, like,
credit.
It should not be 50,
you can collect the dividends
Bull was getting
tax-free,
quoted at,
tax-deferred.
like,
You can
60s,
reinvest
quoted
them
at 60.
tax-deferred,
Like,
and you can compound
it's
your
not like I'm getting
wealth
big
in a
positions, but it's
tax-deferred
like
basis on a credit
very
instrument.
high EV.
Which normally you can't do it with a bond. You can't do it with a preferred stock that's a normal qualified dividend distribution. So there's a powerful compounding effect, and as you compound those dividends, you're lowering the basis in the instrument. So you collect dividends until the basis in the instrument is reduced to 0. If you then pass that instrument to your heir, if your daughter or your son inherits that instrument, they get a step-up basis. And so you got $100 of dividends tax-free. They will get $100 of dividends tax-free. And you can collect over 20 or 30 years, you can collect $200 of dividends tax-free on a $100 investment in the instrument. And what does that convert to? Well, look at this. You have $100. You invested for 21 years in T-bills. You pay taxes on it. You reinvest the dividends after tax. After 20 years,
This has
you've
been
got
35
158
minutes,
bucks.
So theoretically, this could end.
And you're
any
getting
minute now.
$3.68 in after-tax cash flow. If you do the same thing with digital credit,
Like,
after
it's
the
crazy
same
how some
time
of these are still
period,
priced.
you
I
have
feel like I'm the
10,
only one in here
not
clicking
10, but
these.
6 times as much money. You have $965, and you're
Whoever this
collecting
market maker is.
$107 a year on an original investment of $100. And so there's a massively powerful generational wealth transfer opportunity here for risk-averse investors and credit investors and people that never want to stomach a major drawdown, but they do want to compound their wealth
It's Satoshi. You
in
think
a
that's
very
quoting?
tax-efficient way.
Makes sense.
So let's talk about adoption. Who's buying this?
Oh man, this could be ETFs.
80% of STRC is
I'm
held
only
by
here for the
retail accounts.
gains.
It's been a retail explosive phenomena. We counted 120,000 distinct retail accounts as of a few months ago. And it's also being adopted by corporate treasuries in size.
I also.
It's
gain
also being
knowledge.
adopted by institutional investors and credit indexes. It's also being adopted crypto natively. It's also being adopted by a bunch of financial innovators.
Okay, did he dodge ETFs there?
Our estimate is,
All right.
first of all, there's a lot of ways to buy it. You can see, you can get it on E-Trade or Robinhood or
I'm a little
Fidelity or
scared about
Charles
ETF
Schwab.
right
So
here.
all of the standard retail rails are supporting this. You can buy it in 10 seconds. So it's easy. It has spread very rapidly, been a very successful retail product. And we estimate
All right, boom. We
3
survived no
million
ETF
households
there.
right
We'll take
now
It literally
are
ETF was
benefiting
on
from
the slide, by the way.
STRC. So what is our vision? Our vision is to power millions and then tens of millions and then hundreds of millions of households with a high yield savings account. It's a straightforward thing. Everybody wants more money. Everybody would like a bank to pay them 3 times more than they're being paid right now. It's not even debatable. Create a digital yield account or a digital money account. 1 billion people want that. And so we've got a good start, 3 million in 8 months. But we're not going to stop there. We're going to go to corporations too. If you're a company, you probably got most of your money in T-bills. And T-bills are giving you 3.5% before tax, 2% after tax.
All right,
Well,
this is going pretty long.
STRC appeals to a lot of these corporations because the tax equivalent yield is 5x higher. Like, wouldn't you like to get paid 16% instead of 3.6% if you're a corporate treasurer? So clearly, this has become very interesting to a lot of people. If you allocate 1/3 of your treasury capital to STRC, you double your cash flows.
Wow, he's showing the accounting impact.
And if you
so he's
actually
definitely trying to
can
get
put your
corporations
treasury into
here.
STRC, you can generate nearly 4 times the cash flow. So imagine 4 times the cash flow on assets that you have to hold on your balance sheet. And every company has to hold this. They need to make payroll, they need to pay taxes, they need to have 1, 2, 3 years of working capital, but they don't need to hold it in a low performance money market if they could do better. So who's done it? Energy companies, crypto companies, Bitcoin companies. It's starting to spread pretty rapidly now. I talked about institutional investors. BlackRock and Van Eck run
This
2
is
of the more
potentially
well-known,
ETF.
larger credit funds. Stretch is the 3rd largest holding in each one of them.
Oh,
It's anywhere from 2 to
he's showing all these
6% of their
ETFs.
entire credit
I
index.
sold a ton.
So as money flows into those credit indexes, that money flows to Stretch, that flows to Bitcoin. And so increasingly, I think we'll see we're indexed to credit. There's also been a ton of ETFs.
There it is. Okay,
21
thank
shares
God I sold a ton of
embedded
my
Stretch
ETF.
in an ETF and took it public in Europe
I
a
think
few weeks ago.
Yeah, I ended up
Strive is
flat
creating a digital yield fund,
on
and they're going to
ETF.
bring that to market in
Jeez,
the
did
U.S.
not think this guy was going to show.
There's a number of other interesting
All these
public
ETFs at
funds
the
that are
end.
being put together, and they'll come to market in the coming few months. And that's probably a good segue for me to talk about
Wait, I
money
clicked your nose?
and yield.
Or
the opportunity is for 1,000 companies to create their own digital monetary instrument or digital yield instruments, all powered by digital credit, which is in turn powered by digital capital. Look at what we've done here. We've taken digital capital, 35 vol, 39 ARR, and we split it into equity and credit. The credit is 3 vol, 11% yield. The equity, 72 vol, 58% ARR.
In the 50s?
Right? So you can see what happens when you tranche the commodity into a credit and an equity instrument. The credit is layer 2. We think of layer 3 as money and yield. And there's a lot of interesting layer 3 applications that your company could implement, that any bank,
Saylor,
any crypto exchange, any investment manager, even an individual
Saylor
can implement. So we define digital money as 0% volatility, daily liquidity. It's high-powered money, right? 0 vol, I can get the money back every day. I get streaming dividends. Digital yield would be maybe non-zero vol, maybe not liquid every single day, but is built on digital credit. Well, you can imagine, you can take Stretch, you can tokenize it.
No, it's like over 45 minutes now.
You can put it in a private fund, you can put it in a public fund.
This is the same presentation, John? Are you serious?
Into a bank account. You can deploy it via any platform.
That's actually
via Binance,
crazy,
via
Alpha.
Coinbase, via Cash App. You can deploy it via the Commonwealth Bank in Australia, or Deutsche Bank, or JP Morgan, or Morgan Stanley.
Oh, it's not exactly? Okay.
You can take it public on the NASDAQ, or the Euronext, or the NYSE stock exchange.
Ooh, stock exchange, by the way.
You can step up and down the volatility. You can step up and down the yield. You want to crank the yield to 30%, you could do that. You could actually step down the yield. And then you can modify or program the liquidity from continuous to daily to weekly to monthly to quarterly to annual. We've seen people doing all these things, right? And so digital money, it can come as a coin, it can come as a fund, it can come as an account. When you start thinking about it this way, you realize that if you step it down, you create 0% volatility, 7.5% yield money, like a perfect stable coin, Bitcoin-backed, that pays 7.5%. There are announcements about that are just coming out right now. There are companies that are going to do that in the crypto ecosystem. And then you can see here that why wouldn't you just lever it up 3 to 1 and, maybe you collect $33 or $35 of dividends, you pay $8 of interest, and you keep $25 on a $100 investment, so you've got 25% yield. You just loop it 3 times. And so that's also possible with digital yield. And here are some examples of companies doing it. Apex is doing it. Saturn is doing it. Hermetica is doing it. There's a big thirst in the crypto economy to generate Bitcoin-backed yield, and so some companies are creating yield on Bitcoin with this. And then there's a lot of people that want to create stable coin-backed yield.
I've already done
How do I get yield off my stable coins? And then
probably gonna be super
that's
short.
a very straightforward thing as well. And Apex and
tomorrow.
Saturn
Powell's
are doing
gonna be
that.
really big. It's Powell's last
Of course,
speech.
you can also innovate with mutual funds and private funds, and you're seeing tokenization taking place right
actually,
now.
It's pretty early in the day. Maybe
How fast?
Did want to do
the chart's
spaces
out
on
of date. It was 0 to 200 million in the last 4 weeks, and now it's about to go through 300 million. So this has gone from nothing to hundreds of millions of dollars. I think we'll probably go through $1 billion of AUM over the next 4 to 8 weeks. So this is explosive industry downstream of Stretch. And we're committed to helping everybody that builds on top of STRC. And we want to make it higher frequency, more liquid, less volatile. And one way we think we can do it is to double the frequency of the dividend. So go from monthly to semi-monthly.
Central bank,
So-
yes. What price are you at Central Bank?
You guys get paid every 2 weeks by your employer, so why shouldn't your assets pay you every 2 weeks, right?
Powell.
Why wouldn't you want that? So it works out, instead of 12 cycles where you have a dividend cycle,
Pandemic
a drawdown,
tanked? I
it
haven't
goes
looked
to
at the
24
prices.
cycles. But 24 cycles with
You
half,
mean it's like yes is way
half
cheaper,
of the
yes is more
intensity,
expensive?
half the dividend, which means that in theory, we should be able to get the thing to vibrate in a much tighter range, and that will decrease the vol. We're
52 for
hopeful
yes
it'll
pandemic?
decrease the vol, increase the liquidity. That's what we would expect. And whenever you double the frequency of something in the physical world, that's called taking it an octave higher. A note that's an octave higher is double the frequency. It's a higher energy, higher fidelity signal. That's what we're doing with STRC. I just make a couple of points here. It will be the only preferred stock in the world that pays semi-monthly out of 921.
I mean, Central Bank.
It will be
looks
the
pretty
only
close to
stock
fair
in the
value.
world that pays a dividend monthly out
oh,
of
wow, this guy hit cycle.
24,000 common
But it
stocks.
looks
It'll
pretty
be the
close
only
to
one
fair
that pays
right now. Are
semi-monthly.
there any qualitative
So
reasons
we
you
are
think Central
innovating in
Bank's gonna be, like, way
frequency
better?
and engineering, construction, and
For tomorrow,
and
with it being
design.
his last speech.
But at the end of the day, the great innovations will be the people that put the funds and the coins and the tokens on top of it, because they can go to hourly streaming. They can go to hourly frequency, 24/7, 365. They could, step it down, loop it up, transform it into yen, euros, dollars, whatever you might want. And so we're really excited to provide a stable platform for everyone else to build on top of it. This will go to a vote, and the polls will close in early June. And if it's approved by the shareholders, then the first record date will be the end of June. The first payment date will be July 15th. And those polls are now open. So if you're a stretch holder and you'd like to make your voice heard, you can go to our website and you can vote, or you can do it here. And with that, I will end with the thought. Digital credit is a killer application of Bitcoin.
He's ending with
We
the thought.
expect to sell tens of billions of digital credit until we sell hundreds of billions of
Someone
digital
bonded
credit.
this pretty early.
And if we sell hundreds of billions of digital credit, we will then move to see if we can sell trillions of dollars of digital credit. Every dollar that goes into digital credit will flow into digital capital. It will flow into the Bitcoin network. And as it flows in the Bitcoin network, the price of Bitcoin should increase. We expect that digital credit will drive the size of the Bitcoin network. And what's the end game? The end game isn't that complicated. It's give a bank account, an 8 to 10% a year yielding high yield digital bank account to 1 billion people, drive Bitcoin to $10 million a coin, and make Bitcoin a $200 trillion network until it grows higher, and give everybody in the world an alternative to 20th century credit instruments, zero yielding bank accounts, lackluster junk bonds, private credit, or risky, rickety equities, or all of the challenging real estate investments that are difficult to manage,
Stuff
that
got
are
bonded
illiquid,
so early, by
that
the
are
way, on
immobile.
this.
And those things collectively represent the digital transformation of all the capital markets. And as we like to say in this business, in the Bitcoin community, we say, fix the money, fix the world. Digital credit is the next killer application to fix the money, and it's going to spread Bitcoin everywhere in the world, and it's going to cause Bitcoin to back all the stable coins, all the crypto tokens, all sorts of other conventional credit instruments. And it'll be a good day when the major banks and the major investors in the world all own some digital credit, or they offer digital bank accounts powered by Bitcoin. You guys all made it possible, and you inspire me every day, so thank you. I'm appreciative to be on the journey with you all.
Is he officially done? I think it's officially over. All right. Well, look, this, this isn't our usual Trump event, but, we talked about slop markets on the Moonlight stream. Not calling this one a slop market, but this was a smaller market. And you got to find your spots, We had some good buys live here. Yeah, I mean, this was honestly a pretty good one. I should play more of these. Like, Million pre-market was, like, pretty insanely cheap at, like, 92. We were able to click, like, 1,000. I got to know what this market maker is doing. Satoshi was just a bond after he said, and then we lost on ETF, no, but I actually was flat on this strike because we got them cheap. And then, Bull, Ethereum, like, getting these at 60 cents, I don't know, it was pretty bizarre, and I don't really know much about Saylor or Bitcoin, but we'll take it. We will take it. Trump is going live tonight at 8 p.m. For dinner with the king. I think it'll be, I just generally think it'll probably be pretty short, but maybe it'll be like a full dinner speech. I'm actually not sure. I haven't looked at it a ton. I was so focused on the king's speech earlier today, which, if you guys caught that stream, it went pretty well for us. But yeah, look, Gustavo, I know. Look, hey, but you should be, of all people, you are the slop king, okay? You should have built up your focus to be able to just endure hours and hours of hearings. I haven't. So imagine how hard that was for me. Ladies and gentlemen, thank you for tuning in. We'll be back tomorrow with Jerome Powell's last speech as the Fed chair. It's going to be a sad day tomorrow.